Ladies and gentlemen, welcome back to the channel. Stocks are moving higher yet again today. The S&P is up 0.5%, nearing a new all-time high. The Russell also performing well today. We talked about this in the prior video, but when you get these hammer candlesticks, there's like a 90% chance of significant upside following that. So I'm not super surprised that stocks are doing well today. And I think after even like Netflix earnings today and after hours, we'll get into the earnings lineup. Into next week's big tech earnings, you're probably going to see this market go even higher from here. And I'll give you a rundown of my expectations towards the end of this video. All of the news, the headlines, and the data that came out today as well. You can categorize it as better than expected, at least for the economic data, and that is helping to contribute to this risk-on attitude that markets are taking today. So ladies and gentlemen, let's go ahead and get into all of this information. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. We are starting to make our earnings trades. I put on the first earnings trade that I'm excited about. Come check it out, link down below in the description of this video. We are going out finding small cap stocks with value, like potential 10, 20, 30, 40, 50 Xers. We invested in Nebius at $17. Today it's $56. We invested in IONQ at $7. Today it's in the 40s. We invested in Applied Digital at $3. Today it's over 10. We have invested in Novartis Semiconductor at $2. Today it's over 7. Okay. Just some quick examples from the last like 7 or 8 months of underlooked stocks that finally got appreciated by markets and went up a lot in value. I'm not interested in buying the hype. I want to be in at the ground level before Wall Street realizes the opportunity that a certain stock is. And that is what we are executing on. Link down below in the description of this video for that one. Let's go ahead and get into all of your breaking news today. Now, it looks like last month, U.S. tariff receipts soared to $87 billion. Canada's finance minister says Canada is going to double down on getting the best trade deal. Wells Fargo has suspended all travel to China. Apparently, there was someone that was in the finance industry that traveled to China, and then she was hit with an exit ban upon trying to leave, so forced to stay within China. So kind of weird things happening there. The Atlanta Fed GDP Now index falls to 2.39% for Q2 GDP, down from 2.58% before today. The BOE, Bank of England, is testing scenarios that include the US dollar swap market drying up, according to sources. Yeah, that's a scary thought. Also in the news, Amazon's AWS cloud computing unit is cutting jobs. That doesn't sound great. 77% of US adults say they are not completely financially secure, up from 75% in 2024 and 72% in 2023 per Bankrate. More than 25% of employees at the National Highway Traffic Safety Administration are taking early retirements, data provided to Congress shows. This could also be something that is hurting Tesla today because early retirements may delay robotaxi approvals and safety reviews, creating regulatory uncertainties for, Tesla. This could impact deployment timelines, potentially. Now, Vought says the president was clear. He's unlikely to fire Powell. Trump today reiterates a call for lower Fed rates in a Truth Social post. Trump says, quote, "Too late. Great numbers just out, lower the rate." The SEC and Elon Musk asked the U.S. judge to give Musk 6 more weeks to respond to the regulator's lawsuit concerning his late disclosure of his Twitter stake. Fed Kugler says core goods inflation is reflecting the pass-through of tariffs. Kugler says trade is the main driver of U.S. economic outlook. Kugler says CPI shows inflation broadening across core goods. Again, the Fed is delusional, like ignorant. I don't know if these guys need to go back to school and take an econ class or what's going on. Inflation is only ever a money printing phenomenon. Tariffs are not printing money. If anything could be inflationary, it's something like the deficits in the big beautiful bill, but not tariffs. I don't know what these guys are really doing. Like, you gotta just leave the Fed. If you don't understand that tariffs are not inflationary, tariffs do not create like a multi-year inflation problem. Sure, can they create, one-time price increases? Of course. But the argument is tariffs are going to create a wage price spiral. And if you think the labor market is so strong, you can go to your employer and say, hey, tariffs are hitting. I need a big raise this year, and just have it happen in large. Like, that's never going to happen. They are disconnected from the reality of the American economy. Kugler says it's appropriate to keep policy rate of interest steady for some time given low unemployment and building price pressure from tariffs. Barclays sees upside potential for Tesla, citing a setup that could lead to outperformance. Deutsche Bank has said, we consider the removal of Chair Powell as one of the largest underpriced event risks. Now, here on the day today, we did get better than expected economic data. Retail sales month over month came in at positive 0.6%. Last month's number stayed the same at negative 0.9%. The estimate was 0.1%. So you came in way stronger than the estimate. Export prices month over month came in at 0.5%, estimate was 0%, and import prices month over month came in at 0.1%. The estimate was 0.3%, but I do believe a lot of this is influenced from the dollar that has weakened a lot. So I don't think markets take many clues or cues from that. Initial jobless claims came in at 221,000. The expectation was 235,000. So you were actually expecting initial jobless claims to go up. They actually fell from last week. Now, Philadelphia Fed Manufacturing Index came in at 15.9. The consensus was -1, and last month was -4. So all things came in good there. Retail Sales Control Group came in at positive 0.5%. Last month was positive 0.2%. Consensus positive 0.3%. So that was a beat. And retail sales excluding autos, which is what a lot of people look at, not just the headline retail sales number, came in at positive 0.5%. Last month was negative 0.2%. It was actually revised up 1 point from negative 0.3%, and the forecast was 0.3%. So last month revised up, so not as weak last month, and better than expected for this month. All in all, great numbers. Now, business conditions in the Philly area came in at 21.5. That beat. CapEx index came in at 17.1. That beat by about 3 points. Employment beat by a lot, coming in at positive 10.3. New orders came in at 18.4. That beat a lot. And prices paid, unfortunately, came in way higher as well at 58.80. The NAHB housing market index came in at 33, in line with the forecast. So across the board today, it really was pretty good economic data. Now, TSM soared to a new all-time high today following their earnings. The stock up about 4% at the time of recording this video, so that is definitely boosting the overall AI sector today. Now, today and after hours, we're going to get earnings from Netflix. That's the big one. That's going to move your tech names, Interactive Brokers, Lockheed Martin, Bank of Ozark, First National Bank, Western Alliance Corporation, and some others. And then tomorrow morning, we even have quite a bit of earnings. Huntington, 3M, Truist, SLB, American Express, Charles Schwab, Ally, Comerica, and Autoliv that will report. Again, typically when you get a technical setup like this, when you get these really low wicks, what it tells you is markets started off bullish, and then by, some point in the day, usually around midday, the bears really took over and drove the market lower. Like, bears were in full control, and then it flipped again. And then the bulls swiftly took control, and markets closed at the high of the day. Okay? That's what happened yesterday. So it shows you going from bullish momentum to bearish momentum back to bullish momentum quickly. Okay? It tends to lead to a larger rally like 95% of the time. Like, here's a big lower wick, here's a bigger lower wick, here's a bigger lower wick, here's a bigger lower wick, At the lows, there was a bigger lower wick. And, you know, it just tends to lead to pretty substantial upside every time it happens. Okay, these are called Wyckoff wicks, and the certain, you know, candle is called a hammer candlestick. Very, very bullish technical setup here. Heading into big tech earnings, where I think we're going to be surprised to the upside. Don't be shocked if stocks continue higher from here. Okay, seeing the Russell leading, you know, up twice as much or so as the S&P today is also a great sign for that risk on area, especially following yesterday's, you know, risk on sell-off, at least during the whole Trump firing Powell comments. To see that sharply revert and see risk on come back is a great sign of strength for this market. We really just shrugged off the news from yesterday. So I do think stocks are going higher from here. I think the S&P is going to hit 700 by the end of this year. And I do think really as we get to the end of this year, we're going to realize we don't have an inflation problem. The economy's holding up. Jerome Powell, incompetent Powell, is almost gone. We're going to get 8 to 10 rate cuts next year. Okay. Mixed with some stimulative measures from the big, beautiful bill. Trade deals getting resolved, geopolitical tensions dying down, lower taxes, and hopefully a consumer that can start to recover via no tax on tips, no tax on overtime, up to $25,000 on tips, up to $14,500 on overtime. There is a very positive economic backdrop coming, a very stimulative backdrop coming. Even mix onto that, or to top it off, the momentum around AI, the use case, the application that is only growing from here. You know, it's hard to be bearish on this market. Even another provision in the BBB, Big Beautiful Bill, is 100% write-offs on CapEx. So that company can now go build that factory and write off 100% of that as a capital investment in the first year. A lot of banks have commented on this during this earnings season, saying that's one of the most stimulative measures they've ever seen before. Like, when you put the pieces to the puzzle together, you're getting a very constructive backdrop for stocks. You're starting to see a bit of M&A activity pick up. IPOs are starting to come back. And honestly, I think we could be entering into a pretty euphoric next year or two for stocks. My opinion. Again, let me know your thoughts on this down below in the comment section. Hit that like button as well as subscribe to the channel if you have not done so already. Link down below in the description of this video for the trading community. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.